This is the Watchman giving another clarion call. This time around, I'm going to do things a bit differently, as I'm going to speak about something that's rather time-sensitive in nature. Now, recently, Steve St. Angelo had an excellent article entitled "Something Big is About to Happen in Silver." In this article, he breaks down two things and then puts out a question. I'd like to hit 2 points of it by first reviewing the unusual phenomenon he writes about, and then follow up with a cautionary word. The first point he goes into detail about is the fact that right now the U.S. is importing far more silver than normal, and far more than it even currently needs. In fact, in just the first 2 months of the year, the U.S. imported 838 tons of silver compared to just 583 tons the year before. Now, I've already written an article detailing how J.P. Morgan is taking incredibly large deliveries of silver via its custodial accounts and its COMEX warehousing facilities, and perhaps through other venues as well. But Steve's point warrants special attention. Now, why is the U.S. importing so much silver right now, when it clearly does not currently need silver in such high quantities? What could this silver be for? Okay, that's question one. Now keep in mind, because we'll circle back to it, as we go on to his next point, and a point which Ted Butler has been raising too, this next point. The COT numbers on silver reveal that once again the banks are shorting paper silver to oblivion. The manipulation at this point, folks, is having to become progressively worse in order to continue it. Okay, and just to give you an example of how bad it's gotten, last week we learned from the COT numbers that the commercials, which are basically the banks, had gone short over 122 million ounces of silver in a single week, a new record. Furthermore, this report revealed that 8 commercial traders now hold over 376 million ounces of silver short. That's nearly a half a year's production. That's how blatant they're having to make it now in order to sustain silver in the $16 range. Now, of course, historically when banks go short silver or gold, it's always been with the intent of profiting by covering those shorts at lower silver or gold prices. So riddle me this. Why would banks put on 122 million ounces of new silver shorts? That's 2 months worth of global silver production at prices of just barely over $17. Okay, that's a price already beneath what most every silver miner breaks even at when it brings it out of the ground. And do you think these wicked banks intend to cover those shorts at higher silver prices and lose a heck of a lot of money in the process? Or lower ones? Now, I thought last weekend when I saw those numbers that we would go lower this week, and we did. Several times, though we haven't gone too low yet. We've gone roughly a buck lower, stopping at $16.50. After these minor drops in silver this week, it's quite possible that the banks have covered a reasonably decent fraction of those shorts. However, paper silver, I think, is currently walking in a minefield and is now at a point where we've reached a time where stackers need to be mentally prepared for whatever tricks the enemy may use to curb or lower silver prices further from here. And here I think are 2 mines that are hidden in this minefield that stackers need to be aware of. Firstly, I think folks are sleepwalking through this Greek drama, this Greek crisis, and to an extent I understand that. After all, we've all been told that the troubles in Greece would lead to serious trouble for half a decade, and yet here we are. Everything's hunky-dory, right? Yet I can't help but think that something bigger is brewing right now in Greece. It turns out the latest rumors about them being close to a deal with creditors was a lie they admit they told just to stop folks from pulling more cash from their banks. Now, as Jean-Claude Juncker once said, when it becomes serious, you have to lie. That's the way these people think, and that's exactly what they're doing. So a Greek default, though not a certainty, is still a possibility, one which would crater the euro, sending the US dollar soaring in the short term. And this, of course, would make it much easier for the banksters to hit silver, as they'd have the wind at their backs. Now that's one mine. Another mine that's buried in this field that stackers need to be aware of is that the Fed is also now talking again about raising interest rates. They're saying that they could actually raise them as early as June, which would be just in a few weeks' time. Now, the Federal Reserve has cried wolf on this one many, many times, and no one believes them anymore, and that may just be the problem. Okay, they keep threatening to raise rates over and over until they get to a point where no one expects it. But that means that if they do finally do it, even a blip at one point, it would totally catch the market off guard and give them the most bang for their buck. Okay, could all their threats to raise rates this time around be jawboning? Well, yes, of course it could. It's possible. But remember here, these folks are desperate to contain silver to the very last minute this system has. With that in mind, knowing that it would likely take some unforeseen action to help crater silver beneath key technical levels around $14, what if the Fed did just raise rates, say for a teensy-weensy amount, for 0.25%, just for a month? Just to say they tried to raise rates, but it didn't work. Okay, what would that do to the dollar? Well, it would spike it, to be sure. And the spike that it would cause might be enough to surpass the double top the dollar experienced recently at just over 100 on the US dollar index. Now, either of those things, a Greek default or a surprise rate hike by the Fed, could help give just the extra firepower these criminals need to attack silver and cash in on a lot of these shorts they've put on, couldn't it? Now let's circle back to point number one. Why is the U.S. importing hundreds of extra tons of silver right now? Well, if any of what I just stated actually does occur and silver hits lower lows, do you think that silver demand, physical demand, might go insanely higher? I do. It's possible that some of this extra silver they're importing could be used to meet that physical demand for that brief stint. Now, nothing I've mentioned here is a guarantee, brothers, and the opposite could happen. It's true. Silver could spike and none of this could happen. However, if the pattern of what we've seen over the last 4 years holds true, and the bank shorts are still a cause of concern, along with certain other dangers that no one is taking seriously, that we must all, exercise caution, at least mentally. Now, please understand here, I'm not telling anyone not to buy silver or gold. Really, the only folks who should be really concerned with the kind of stuff I'm talking about are the day traders. But, me personally, I'm currently buying more silver for my sons and for my church. Now remember, $16 silver is a no-brainer anyway. It's already insanely undervalued. All I'm saying with this clarion call is that the banks have shown us that there's no, action they won't take to hold silver in check. And there's no such thing as strong price support. And they need to hold silver down until the bitter end. Okay, as insanely cheap as silver is, it's still entirely possible it could become even cheaper in the short term. And if the bank short positions indicate anything, it's that it seems that they don't intend for this 4-year downdraft to be over just yet. It's possible they could drop the hammer one last time as they did in the spring of 2013. Not a given, but it's possible. These crooks are full of cunning, and it behooves all of us to be mentally ready as stacking warriors for whatever likelihood may be next. Now, both the dollar's and the system's days are numbered. But since we don't know the exact number of days they have left, we should be cautious and vigilant as we stack and attack. This is the Watchman signing off. Stay vigilant and bring the fight to them.